Good morning, folks, and welcome back to Almus Market Mornings. It's another Tuesday, and the pattern seems to have repeated. We begin the weekend with some sort of an optimism on the peace deal, and by Monday evening, when US opens, the commentary reverses. Fundamentally, there's a mismatch between what US and Iran are saying, and that's hitting risk assets, but that too in pockets. On one side, AI stocks are doing quite well, and on the other side, the general sentiment is fragile. Oil prices are causing inflation fears and keeping yields elevated. Rupee strengthened significantly, even breaching the 95 mark, traded around 94.85 before weakening past 95 again. But it's been a good show so far. Good morning, JK. What's your reading of all of this? It seems like, as we have discussed earlier, it seems like a good old pattern, and that's repeating as usual.
Yes, Suraj. In fact, in yesterday's update, I had also told that it's not the end of every volatility or the tensions, and it's going to repeat, and that's precisely what has happened. In fact, the recent developments confirm what the markets have been suspecting, that the U.S.-Iran negotiations were never close to a meaningful breakthrough. And Iranian parliament minister and also negotiator accusing Washington of violating ceasefire through continued pressure on Iranian ports and failure to restrain Israeli military actions. They have reportedly suspended message exchanges with the U.S. and which gave a sense that there can be no further negotiations as well. Uh, Despite the diplomatic setback, Trump administration seems to be cool about it. Washington continues to rely on sanctions and economic pressures, believing that Iran remains financially vulnerable despite its threats to escalate. Iran has linked any agreement to a broader Israeli-Lebanon settlement and warned it could disrupt both the Strait of Hormuz and even the other alternate route of Bab al-Mandab with Houthi support. So Tehran appears willing to prolong the crisis, calculating that the tightening global inventories could eventually strengthen its bargaining position in the coming months. What they are counting on is also that, as I also referred yesterday, as a war or the opening of the Strait of Hormuz delays the usage of strategic reserves and depleting it further could create more problems for the economies, and oil prices once again could see much higher levels as well. I think as US remains, with a strategy of maximum economic pressure on Iran while avoiding a disruption severe enough to trigger a sustained spike in oil prices, ultimate path to any durable agreement depends on which side first relents on its currently irreconcilable demands. Logically, markets saw sudden bout of volatility across segments yesterday after the Iran statement, with oil yields and dollar rising and stocks suddenly turning negative from good gains. In fact, the negative sentiment has continued in Asia today, despite some sort of a calmness that came in the US session after President Donald Trump said talks with Iran will continue. And he also said that there were talks with the Israeli Prime Minister, that there will be no troops going to Beirut, and there will be no, attack on the Lebanon by Israel. So, despite this, today morning we are seeing some sort of a risk-off sentiment, holding on the markets, particularly in Japan, South Korea, and even the Nifty future are showing about 200 points down. So we are slowly getting to a stage where markets may focus on other issues like inflation, monetary policy, rather than being caught up due to undue volatility and risky positions reacting to every headline. The renewed market volatility due to Iran's stance has also masked the set of strong economic data that is coming from US. Yesterday, we had another good number, ISM manufacturing coming at four-year high of 54. The manufacturing activity was higher And new order index was higher to employment index at 48.6 versus 47.5. The price category was, of course, lower, but respondents suggest that price pressures are in the pipeline. And today we also kick off a series of job-related data from US with Jolt numbers, and more numbers ahead tomorrow and day after before we have the final number from BLS on Friday. We are expected to see an increase of 85,000 in non-farm payroll. Unemployment rate unchanged at 4.3%. So we had another record closing high for S&P and Nasdaq. While many analysts continue to debate about valuations in some of the AI and AI supporting companies, price decrease still is ongoing, and many multi-baggers have been seen even this year. And on the currencies creeping, interestingly creeping up move in USDN, and conversely, the steady decline in USD CNH. I mean, it's kind of weird that on the one side, dollar continues to slide, and on the other side, dollar continues to rise. Interestingly, the Chinese yuan now trades at its costliest level against the yen in last 34 years. On the Indian side, initial part of the day, INR continued to appreciate. 94.71 was seen, with some rebalancing flows reported, but then well ahead of 94.50, we had support. Buying came from large importers as well, pushing above 95. The one question market is dealing with is if and when there will be some policy measures on, to rein in the dollar and entice some more capital flows. Other speculation is about whether RBI resorts to rate hike in the upcoming meeting, keeping currency weakness in mind, but we think that's a low probability. Moves to attract more capital and perhaps restrict outward remittances is much more likely. Some measures could form part of the RBI policy announcement on Friday, with the more uncertainties creeping both in global and domestic scenarios. I would think that INR sticks to the range between 94.70 and 95.80, at least for the next couple of days. Thank you.
Thank you, Jackie. And yeah, as you said, it's quite interesting because on one side we are having S&P, Nasdaq doing quite well, while on the other ends we are having other assets getting a tumble. We also have, this oil price rising. And the more the conflict goes on, it's going to be bad for oil, and it seems like it's the story of which side will blink first, because Iran is thinking with the blockade of Hormuz and the continuous drawdown by via SPRs of countries, it will put a lot of pressure on the US, while US thinks it can put maximum economic pressure on Iran via the military blockade. So again, it's the story of, I think, which side will sort of surrender first. But otherwise, yeah, things have been, as we have been discussing, risk assets not doing well. On the data front on Friday, we have the jobs number, NFP, and unemployment rate. While for the rupee, we had a good showing yesterday. Now the questions are on whether there will be any measures to attract capital flows or via RBI policy on Friday. So broadly, it should hold on to a range. Yeah,
Swaraj, I had just one question.
yeah.
Interestingly, NVIDIA announced something about entering the personal computers through AI chips. So, what
Hmm.
does it exactly mean? Can you just give some brief on that? Because it seems like a very innovative thing, and which everyone would be interested to have on their personal computers.
Yeah, so if I were to just quickly tell you, what happens is that to develop any sort of LLM, to train any LLM, it requires a huge amount of compute, which is computing power. So usually what happens is that we have heard of these chips, Intel i7, or in Macs it is the M5. So all of these are chips which give a lot of power for people to compute. But these are nowhere close to train large language models, because they essentially are trained on the internet. So they will go through the entire internet, gather all that knowledge, and then compress it in some manner, and then as in when people ask questions, it answers. This
And all
requires
these happens in milliseconds, right?
all this happens quite quickly. Yeah. So as of now, what happens is that to train LLMs, these are like huge computer fields. There will be warehouses of just computers. It's like servers, as we say. without any display or anything. It's like just, you know, computer CPUs with a lot of cooling power. So it requires all of that. But now the technology is evolving so fast that, you know, all of this is sort of getting compressed into small chips that can be used even in your laptops. So, I mean, it's in essence, the compute power for laptops or personal computers is taken leaps and bounds. So it's a very big sort of innovation. So I would say, if you remember earlier, the first computer was an entire room, which with very low compute power. And today,
Mm.
within our phones, we have got a significant amount of compute power, right? Like that's the technology. It has shrunk. A similar way with this NVIDIA chip, it's a very uh, it's a moment of technological reckoning because such big things are now again compressing, and you are having very powerful computers that are going to be built.
Okay.
Yeah.
So on the one hand, we keep talking about to overvaluation, investments at record levels and all, but the innovations keep going on. And
Yes.
so we don't know what to expect next, of course. Yeah.
Yes. Yes.
Thank you for explaining that for
Thank
us.
you, sir. Thank you. Thanks everyone for listening. We'll catch up tomorrow with a fresh round of updates.
Thank you.